All attendees are in listen-only mode.
Good evening, everyone. My name's Debbie Moses, and please type in the question box if I'm not coming in clearly or you can't hear me. Welcome to HGSI's Power User webinar. This is our third session featuring an avid user of HGSI software. It's always interesting to see how others apply the software to their investing routines, and tonight David Galardi will give us an inside look at how he uses the software and how he modifies it for his unique needs. He's also going to show us how he develops customized chart views, filters, and combos. Now, a little information before I introduce David. First, he's going to present for about 75 minutes, and that includes questions and answers. You're going to be muted throughout, so please type your questions in the panel on the screen, and David will answer them along the way. If you have any questions after the program, please direct them to me at debmoses@highgrowthstock.com, and I'll make sure they get in the right hands. And in fact, I didn't put my screen up. I'm going to put this information on the screen for you. There we go. We are taping this, I get asked that a lot, and it will be posted at our website, most likely later tonight. Also, we've had some instances of people getting knocked off and needing to re-enter the webinar, and if you find that happens to you, if you look on the screen here, you have to re-register with a different email address to get back on. So you can either copy down the number of the webinar that's on the bottom of the screen and go to joinwebinar.com if you get knocked off, or you can just simply re-register using your original invitation, but again, a different email. So this summer, we will be bringing more power users to you. Ray Ebert is lined up for late July, early August, and we also are in process of scheduling Woodward and Brown to do a session on the new Kahuna Force indicator. So keep an eye out for those announcements. If you are not on our mailing list, go to our website and click on the support button to sign up, and you'll get these webinar announcements. So with that, I want to introduce David Galardi. David has been an active investor since the late 1980s. He began, he tells me, as a pharmacy student, interning with W.H. Newbold & Sons and also at Fawnstock, two bond companies in Philadelphia. And he was an analyst in the biotech industry, which was kind of a relatively new thing for those companies. He has been using HGSI for over 6 years, and he describes himself as an opportunistic investor. He uses a specific style for a specific purpose in specific accounts. And I'm sure as he opens himself up tonight in terms of how he invests, we'll understand that better. When he's not investing, he works as an executive VP for commercial operations at Apogenics, a global healthcare consulting firm that's headquartered in the Dallas-Fort Worth area. So I'm now going to hand it over to David. Here we go. David, are you there?
I am here. And I'm just getting my screen all squared away. Can everyone hear me okay? Does it sound fine? If you could just type into the box, that'd be great.
David, we're getting a pretty weak and a soft, so you may have to increase it just a bit. Sounds muffled. Yeah. I'm not sure why that is.
Is that any better?
Bill Sandusky says not much. Ron Feltinsky says could be louder, and I'm not sure. Yeah, David and I went over this before we started. Are you on a speaker, David? Someone's asking.
No. What we will do is I will call in here, and
now I'm getting.
Just going to call into the telephone number, Debbie, and I will go to telephone mode, and I'll be right back with everybody in just a second.
Okay. Hang in there, everybody. David's going to call in.
Okay, Debbie.
Yes. Now let's get you up here and make
All
sure
right.
you're
I think we're set to go now.
good. Way
All
better.
right.
We're getting some way betters.
Yeah. Is that way better? All right. Let me.
And we've got one question already from your friend Jeffrey Scott. He wants you to comment on the ticker know-how. I just thought I'd share that with you.
Oh, that's quite funny. Quite funny. Well, we'll get to know as we go. But first of all, I want to thank everyone for joining tonight. I am in Dallas today, which is a rather unusual occurrence, but a fun one in any case. What we're going to do is I'm going to run through my approach to investing. You'll see down in the corners here the organization that I've got listed on this PowerPoint is actually a personal corporation that we run out of Dallas, mostly for our investing. So with that, I'm going to get started, and feel free to shoot some questions my way. This is going to be interactive and not very pretentious, at least I hope not. So let's get started. If you take a look, I wouldn't be a trained professional if I didn't have a disclaimer. So for that purpose, as everyone probably knows, I'm not a licensed broker-dealer, and this discussion is primarily for demonstration purposes to go over the HGSI software and how I use it. One of the things that I always get asked is, what kind of an investor are you, and how do you start your day? Well, the first thing I always start with is an espresso. I'm an Italian guy, so I like my espresso every morning in between waking up my 6 kids. And then the typical day starts off with what I consider to be a somewhat structured approach to investing. I have learned over the years that one of the most important things to read in the morning is to understand what the calendar looks like for the day and for the next day, and to review it and re-review it. For those of you that are followers of Ian Woodward, you will know that Helicopter Ben has an incredible amount of tools in his arsenal at the Fed, and knowing what he can deploy and when and the type of information that's coming is very important. So typically, what I try to do is take a look at the Wall Street Journal's market data page, look over that calendar, and understand what is coming out in the next 24 hours. I'll then confirm that by going to briefings.com, doing the same thing. And then I like to look at a subscription site called The Fly on the Wall. One of the things I've learned is that there's a number of ways to invest. I'm actually going to talk about that in just a second. But there are certain accounts that I use where I try to only invest in the secondary offerings of companies, or short them for that matter. So The Fly on the Wall I found is a great tool for that. The last piece, in today's world, the currency markets are very important. I have gotten comfortable working with Action Forex, which provides quite a bit of information to me. Next piece of the day in the morning starts off with Medscape. I'm a pharmacist by training. I try to stay very up to date on healthcare issues and drugs coming to market and devices coming to market. And Medscape gives me a good, quick scan of the industry in the morning. And then if I want to go and find anything deeper, I can do that right there. And then the last piece of my morning reads are the headlines at Zero Hedge, which is a blog slash newspaper type of a publication online that will provide information on the hedge fund industry, and then it goes on sort of in the smart money, if you would. Next, I always check Ian's blog, assuming that he has not sent an email the night before to go and look at it. I will rescan Dave Steckler's ETF Roundup just to check to make sure that what I've done in my HGS work, which I'm going to show you in a little bit, actually lines up with what Dave is saying as well. he's always been a good meter for me and a good friend, so I like to look at his information. The last, sort of the more curious one, is Jim Rogers. For those of you that aren't familiar with Jim Rogers, he's a fairly famous and hyper-wealthy commodities trader and currency trader who started the Quantum Fund with George Soros years ago. Also, often a little bit of a counter opinion to the masses. I like to listen to him and read his information that he puts out, primarily because it tends to be well thought out and common sense. And that's really the way I'd like to approach my investing. I don't try to overcomplicate things, primarily because I don't have enough time to do that. So that's what we try to do, is try to keep it very simple. For those that may be interested, when I was first introduced to high growth stock, Jeffrey Scott has been on these webinars many times, and for those of you that don't join on the weekends, you probably should. He tried to get me to come to HGS meetings for about, I want to say it was about 7 years. And long story short, I consistently said to him, oh, I don't need a tool. I know how to do it. I know how to work on the internet. I look at my S&P book on every Sunday night. I've got it down. Little did I know. So long story short, I ended up going to one of the meetings, meeting Ron and Ian and George and Matt and the team and the rest of the folks that came on in the actual seminar. And I was introduced to HGS. The best way that I like to categorize HGS is that it really is a system that allows you to take out different types of weapons, for lack of a better way to put it, and I'll try to use that theme throughout this discussion. And you can take a shotgun approach, a pistol approach, or a rifle approach. And what I mean by that is that if you break the markets down into the industries, the general groups, and the securities, you can start to understand that really tools like HGS, and HGS in particular, are designed to take a very large universe and whittle it down to a small and manageable group of higher probability selections for your investment. So we'll go through this in detail and sort of build from scratch some filters and combos and warehouse views today. But the crux of the issue is that HGS allows the markets to become manageable, and that is by taking those 8,000 plus securities and whittling them down to a manageable number. That number is different for everybody. Some people, it's 300 stocks. Other people, it's 150. Folks like me, I like to get closer to 50 to 100. It really depends on your style, your comfort level, your ability to assess risk. All this type of stuff comes in play. When I look at stocks, I primarily use HGS for my scanning. Frankly, I have gotten away from using most of the other products out in the marketplace, primarily because I didn't find them doing much for me, in addition to what I was getting from HGS. Now, that's not to say that other products aren't worthy. They just, it's just one of those things where I feel I can get what I need out of HGS. The other piece of investing, obviously, is your trading platforms. I've gone back and forth. I've had accounts probably with most of the firms, and I have a couple of private accounts as well. And I've pretty much settled on my platforms with Thinkorswim and TradeStation, and I use them, to manage accounts in a specific way, moving more and more of my work to TradeStation for its automation. And then the last thing you see there is the arsenal, and my preferred arsenal are those three tools. The arsenal logo there is for Ian, who I'm hoping is on the line and is getting a kick out of his old team showing up there. So when you hunt, one of the things that we try to do is we try to hunt safely. And hunting safely means wearing bright colors. And what I mean by that is you need to understand that the market typically will indicate the trend. So for me, I originally, when I started off, was much more of a bottoms-up, pick the stock and hope that the stock goes up type of a guy. I've since over the years have learned my lessons and am now much more along the lines of where's the trend. And frankly, over time, the biggest lesson that I've learned is it's okay to stay out of the market, and you're not going to miss much if you avoid losing money. And that's really the key here. So the market indicates the trend, the sector, i.e. the group of stocks that the company may be in, drives the magnitude of the stock's performance. So the equation that I like to use is the market plus the sector equals the vector, which in effect is the magnitude or the strength of that direction. Additionally, after you find these stocks and you understand the market and the sectors, you need to know how to enter a trade and exit a trade. Define the criteria, implement it, and do not think about it. No one has ever been penalized for being right too soon, meaning that if you can get out of a trade with a small profit, that's better than keeping a trade that's going in the wrong direction. And lastly, on this slide, see what you believe or believe what you see. Very important credo that I try to live by is that I do not try to make inferences on any of these charts or fundamentals. Let the numbers speak and the charts speak for themselves. So for tonight's exercise, we're going to lure them in. Food for thought. No one tool can tell you when to buy and sell. And I can't say that enough. I've been to enough meetings in Palos Verdes. I've seen enough stuff on these message boards and talked to enough individuals. The black boxes don't work for the individual investor. And in some cases, they don't work for the hedge funds either. So you need to understand that. You need to understand what you're comfortable with. That's really the most important thing. The next thing we're going to do is we're going to design the bait. We're going to want to know what we want to hunt for, why we're hunting for it, and what we want to eat. So what I mean by that is if I am not comfortable investing in a specific type of a sector or a specific type of a security, then why search for it? And we're going to develop some filters tonight that allow us to get to where we want to go. And lastly, in the bold box, it pays to know. And what I mean by that is you need to know the direction you want to go in. Obviously, we all want to make money, but it's most important to understand what is going to make you feel comfortable in your investing. At this point, I'll just talk a little about my style. My style is opportunistic. I don't consider myself a type 1, 2, 3, or 4 in the Palos Verdes vernacular. And what I mean by that is, a longer-term investor, a swing trader, an intermediate trader, or a day trader. I don't necessarily see myself as any of those. I see myself as an individual who has specific accounts for specific reasons. IRAs are treated one way. Day trading accounts are treated another. I do a lot of Forex and futures trading. That's treated completely different. And then likewise, across all that, I use options. So, I have a pretty defined way I go about it, and the way that I go about it is based on the type of account it is, not so much my personal style. So with that in mind, everything that I do is designed to reduce my risk of loss, and that's that's very important. So let's get ready to hunt. We're going to do a general market update tonight. Obviously, it was a tough day. I'm going to probably talk through this as I do an update to the HGS system. But we're going to go through slices, which is a new feature of HGS, industries and stocks, and then we're going to make a couple traps, as I call it, which are the filters, the combos, the warehouse views. We'll look at some stocks in real time, and then we'll take some questions and let everybody sort of participate in the discussion. I'm going to put this slide up next. It's the last slide for the presentation, but it should tell you something when you see that little bear up there, that the markets don't look too hot, at least not to me. As a reminder, there is an HGS seminar in October 22nd through 24th. I fully intend to be there, and I'm looking forward to seeing everyone there as well. So with that, let's power down the PowerPoint presentation and move over to Windows and sort of talk through this as we're doing this update, and this won't take very long at all, at least not on my Macintosh system, which I always have to get in there, that this is actually being run on a Mac as we go here. What the plan is for tonight is to walk through the markets first. For those of you that didn't get a chance to look at the markets, I'm going to pull up TradeStation to sort of show that here graphically. Let me just pull up my .inx, and we'll take a look at that chart so that everyone can get an appreciation for what we saw today. The important thing on this chart, and you're gonna notice that the way I've set up my system, both in TradeStation and as well as in Thinkorswim, I've tried to integrate some of the things that I've found and have learned from Ian and Ron in particular at the seminars. Some of the other things are related to trading styles. So when you look at this, this is the Dow from today, and I'm going to put on the daily so that we can just take a look at it. What I've done is I've built into this trading system some of the things that are obviously available in HGS, and that's the reason that I've done that is because I need to be able to see this in real time to be able to trade. When you look here, as that's still downloading in the background, when you look at this Dow chart, you can see that today was a big day down, no question about it. The high was 1345, the low was 1313 on this index. Not a good day by any stretch of the imagination in the S&P 500. And the fact of the matter is that when you look at the technicals on these, specifically the percent B, which is Ian's bullseye, we're almost down into the dungeon here at 5.98, or a 50 less than 5% range. So you can see this, that the air pretty much came out of the market today, at least in the S&P. The other thing that's really interesting is the relative strength also dropped. Now I'm going to show you in HGS in just a second that when relative strength drops like this, you'll see some changes on some of the HGS technical indicators that we'll review as well. The other piece of this specific chart is that I like to watch the ADX, and my friend Dave Steckler has given me the code here to be able to set this up so that I can see it in a histogram. But you can see that as of right now, we've been in a non-trending market for a number of weeks, where we are well below the magic number of 15 to 18 for trending on an ADX indicator. What this proves to me is that as the market has just tried to find itself, it's probably not a place where you want to be investing aggressively, at least not until I know that the market's going in one direction or another. Remember earlier I had talked about the fact that the market is really the key to investing and understanding where it is. Here you can see back a couple of months back at least, we had a pretty strong trending market indicated by this ADX line, and the market continued to march up. As that trend has been broken, you can now see that we're sort of in a sideways market indicated by the black. And, you know, big swings, at least swings that I consider to be relatively large. So with that, we're almost done here on HGS, and I'm just going to pop that open. I apologize for not doing this earlier. Last thing I wanted to talk about on this specific screen is that from a trading perspective, and I'm going to walk through this in a little bit, I tend to use the inverse Fisher as a just a confirmation for entry and exit points on my trades. And you can see these are all marked. If I wanted to, I could program this TradeStation to trade automatically, and I know that some of the folks on the phone probably do that. All right, so we only have a second or two here left. Let's take a look at one of the other securities that, or I should say, markets that also sort of fell off of a cliff today, and that was the NASDAQ Composite. You can see it basically looks the same as that S&P 500. When I look at those two, these two indices in particular, I get nervous seeing big candles like this. We haven't seen big candles like this since, back here on in February, where we had a big drop. We're looking at another one coming after a candle like that today, which sort of jives with what we've been seeing. So let's hop into HGS and get started. The typical spot that I start for each day when I review, typically at nighttime, is in Ron's Major Market Plus, and I like to take a look at the top-down analysis. Now, one of the neat things with HGS is we have this little box called a QuickPic, and basically what this does, by clicking on this little hand, is it explodes the views into manageable folders. Now, the folders that I use, I've created myself, and in order to do that, it's actually quite easy. And the best way to do it is to go in and just move these folders around. As you can see, this warehouse view corresponds to the view that I have over here on the QuickPic, HGS Classics, Strategies, etc. If I want to change this QuickPic around, all I need to do is drag and drop the views into the specific folders, and I can also create new folders. So, for example, if I wanted to create a specific group of folders, I can easily just type them in. I'm not going to do that right now, but I can create a new folder under Warehouse, and I can call this Galardi Views. And if I want to, I can move certain warehouse views up into those individual folders. So you can see I now have it here, and I have it here as well. And to get rid of that, it's very simple. I just hit delete and confirm. So with that, let's take a look at what we see on this screen. Now, the interesting thing with HGS in particular is that it allows us to set up our view in a fashion where we can get at information quickly. And that's exactly what I want to do. We also have logic built in here. So not only are we filtering the universe with filters, but we are also ranking them using combination ranks. So let's just talk through this a little bit. When we talked earlier about how big the market is, the market has approximately 8,500 symbols that are available to each of us as investors. One of the things that HGS allows us to do is to cull that number down to something that's much more manageable and allows us to focus on what we want to focus on. So when I look at the major market pluses, the first thing that should come to mind is, David, you said there was 8,500 symbols. How did we get to 10, which is noted up here in the top of the menu bar, 10 securities? Well, the way you get there is by filtering. So for those of you that have been in the kitchen once or twice in your lifetime, you know that it's easy to filter flour, right? It's not that easy to filter rice. And really what we're talking about is filtering flour, because we've got filters that allow us to do many interesting things. So let's click on filter, and that brings up a whole host of pre-built filters that come with the program. Now, the standard filter, the one that in my mind is one of the most powerful filters, is the scorecard filter. And that is the one that is, in effect, the home screen for much of the user base of this product. Let's take a look at what that filter is and what it means. So I can select scorecard. If I wanted to, I could also rename it, which I don't want to do. And we're going to hit edit. So this is the scorecard filter. And the scorecard in this case says if the close is greater than $5 and the 50-day moving average volume is greater than 250,000. So that's how we filter out. Now, in this example of these major markets plus, there's an additional filter built into the program that actually will scan this group. So if we close this and just look at this group just for a second, you can see that for today, the gold shares, arguably a bearish indication, were up substantially, approximately 0.2%. And the most important thing is that the gold shares relative to the rest of this group were much, much higher. The other piece is that treasuries, 20-year treasuries, the commodity index, and oil all are on the higher end of this group, or at least above the stock indexes. And the way I look at that is that I say that when I see commodities and treasuries and gold above the stock indexes, that makes me feel that I should probably not be in the market. And that's typically what I would do in this case. Additionally, when I look over on this view, I can find many other interesting things, such as what is the industry. These are obviously ETFs for the financial markets, or proxies for the underlying futures that may be trading in this group. The industry group percentage changes, the earnings per share rank, the relative strength rank, the group rank. Those three things, ERG, make up ERG, which is a proprietary number that was created by Ian Woodward and Ron Brown. That gives us an idea of how much strength is in a specific security. Typically, we look for ERG greater than 240. I like to look at things that are ERG greater than 270. But basically, what that tells you is that when you add up these three numbers, you get 201. TSR rank, I have no idea what that is, but I know it's in this view, and I don't ever really look at it. But it's one of the things that if you're interested in PSR rank, which is a number that's used in the Kilpatrick trading system, then it's there. It's something that you can find. A and D. This is how your accumulation is looking. Anything with an A accumulation has had strong volume come into the security. In this case, it's TLT, or the 20-year Treasury bond. Not something that would make me feel very comfortable, knowing what I know about the U.S. economy, that we've got strong movement into the Treasury bonds. And then we have O-scores and bongos, which is a proprietary indicator, as well as Bongo Weekly. So you can go through this and you can take a look at all the different types of fields and views that are available to you. Scorecard is just one of them. Let's click down and take a look at some other interesting things inside of that Major Markets Plus group. Here's ETFs. Again, in the top-down analysis, we can take a look at different types of things, such as the Force and the Bongo scorecards. This is basically the scorecard view with a little bit of a twist to it. Again, ranked by a combination rank. Let's talk a little bit about the combination ranks because I think that's also quite important. When we looked in the edit view, you can see that we had the filter, and that really is the thing that gets us our group. Now we have combo ranking, which allows us to sort that group based on specific types of criteria that define the strength of that individual security. So let's take a look at that, and we'll click the Edit button just so that we can see how these raw combos in this column here are built. In this case, it's looking for price change over 1 day. The percentage of accumulation versus distribution must be up. The direction of accumulation needs to be up. The force needs to be up in the 13 and the 2 day. And the percentage change and the price also needs to be high over a 5-day period. You can see that in this example, you can change the weighting of each one of these parameters or change the parameters to any of thousands of different combinations in order to get at the exact information that you want. And in just a minute, we're going to show you how we do that. When I look at this type of a combo rank, it tells me that the percentage price change for in the last day is what is being weighted the most, to 25%. All these others are weighted at 1 or 16%, and then lastly, the change over 5 days is weighted just a little bit less. So that's how we get our combination ranking number. Usually when you're using this software, the best way to look at a group of stocks is to use that raw combo. So let's take a look at the charting software, and in particular the gold shares. Let me just maximize this. There we go. Now, as we walk through the gold shares and maybe a few others, what I wanted to do is show you a view that basically I've pilfered from a host of folks, frankly, because I don't like to build a whole bunch of stuff that hasn't been proven, and it doesn't have the math to support it. One thing I know about Ian Woodward is that he loves math, and he's very good at it, and has proven most of these numbers without much question. This charting software is not real-time. It's end-of-day software that we use, and it allows us to place onto the chart many different types of indicators that, frankly, we can build ourselves. So with that, let's take a look at the gold share, and let's talk through this screen and what it really means when I use HGS and why I find these specific indicators important. In the case of the upper portion of this screen, we have drop-down bars that can take us right into all the folders. Okay, we have the actual stocks that were in that previous group that we can scroll through. So, for example, we're now in solar energy. We could be in any of the others in a matter of seconds just by clicking left or right in this ETF folder. So if you think about it, it's a folder on your desk. Within that folder is a bunch of papers. Each paper is a chart view, and this is what we're looking at right here in the fan and then the semiconductor charts. You can go in and search for specific symbols if you like by typing them in here, as long as they're in this folder. And then lastly, we have the same thing that we had in the warehouse in our QuickPics. All of your charts are listed right here in the view, and you can choose multiple types of charts. I typically only look at 3 charts plus these index charts for the major index that's how I've been trained. That's the way I like to look at things. We're going to talk through how you can change this. And then lastly, we've got our QuickPic, which you saw in the previous view. Same thing exists here for charts where I can get at them without having to fiddle with this view section. So very simple, very intuitive, as long as you go slow and take a breath as you're trying to learn the system. It really does start to come to you pretty quickly. understanding the navigation is only a piece of the power of the software. So simple navigation, at least from my book of work. I'll touch on some of these buttons here in just a second, but I want you to take a look at this top window. So each section of a chart is made up of individual windows. So this chart has 1, 2, 3, 4, 5, 6, 7 windows. I'm going to show you the composition here in just a second. Let's take a look. This is what you see on this chart. The top window is all of your fundamental data. The next window is the Bongo weekly signal. The Bongo daily signal is below that. A bullseye is below that. The high jump, which is a proprietary measurement that was created by Ian Woodward, is also included in this package. The price window with various different types of indicators, and then the volume window is in the bottom. Now, the reason why this is important is that this software has much of what is taught in the seminars already built into it, but it also has the ability to add many interesting things that one might find unique for their own needs. Certain folks like to look at specific moving averages. Other folks like to use an ADX. Others like to look at the D&I crosses. All these different types of indicators are built into this software. Let's take a look at this Bongo signal. So the Bongo, not to be a self-promoter, but I was one of the folks that helped create this with some other users of HGS. And if I haven't mentioned it before, one of the great things you get is in working with HGS is a community of individuals who are not only smart but easy to deal with and just love learning from one another. And the Bongo is a perfect example of this. This was a challenge that was thrown out by Ian at one of the meetings in Palos Verdes, and a group of 5 individuals came together and with Ian's help crunched the numbers and came up with the Bongo signal. When you look at the Bongo signal, it's actually built right into the code of the program. So if I want to, I can go and adjust this Bongo signal to whatever numbers I think make sense. Now, the numbers that are pre-built are the ones we tested. And the point that I'm trying to make is that wherever you go within HGS, you can tweak the system to your own individual needs or requirements. And that's what a lot of us do that, is we'll modify things so that our comfort level will be met. And that's what the beauty of the program is. One of the other very interesting things is this bullseye percent V, which Ian has done quite a bit of work on, amongst others, which is the Bollinger Bands. And the Bollinger Bands are able to be viewed in a fashion that is somewhat unique to the HGS system, where the bandwidth and the percent V and the one-day change can all be colored in specific ways. And I'll show you that here in just a second. The rest of these we can go through in detail if anybody wants to, but I'm going to save some time. We'll talk through some of these other indicators in just a second. Let's just take a look at how I view these indicators and sort of the constellation of how it presents on an individual security basis. So here's FAN, which is the wind energy ETF that's out on the market. The first thing that I do when I look at any individual stock or security is I go to this screen within the first window pane, and that is the fundamental screen. Obviously, for an ETF, you're not going to see much here. If we were to get to a security, which I don't think we will find one in here, we'll have numbers built in, and I'll point that out when we get there. The next thing is I typically go up, take a look at other additional information, such as the last close, the averages, the highs and the lows, etc. The one thing I always look at, and specifically when I'm looking at an ETF, is how many shares are trading. For those of you that have been burned on low volume ETFs, this is a good way to get yourself into a pattern of thought where you're checking specific criteria every day to make sure that you avoid those pitfalls. As an example, when I look at these stocks, every single day I do the exact same thing, and I can't say enough why that is important. The more deviation you bring into the day, the less likely you are to be able to compare apples to apples, one, and two, you're very unlikely to be able to catch the scans that you should be training yourself to look at every single day. So I'll look at this, and the first slide that I look at, I'll take a count on ERG. I'll focus on that number. Obviously, this is an ETF, so it's not going to have anything there. The next thing I'll look at is click up twice. I'll look at that volume. If there is a reason to look at ETFs at all, I would, typically around earnings season. If the stock or the scan that I'm doing needs to be dividend related or something along those lines, I'll stop on this piece of the window. I will say this, that the PE is one of the things that I will definitely take a look at and typically do a sort of mental calculation based on earnings, and I'll walk you through that in just a second. Very similar to what Jeffrey Scott does for those of you that are on his calls. So now that I've looked through this, if I want to shrink that or get rid of it, I'll just click the fundamental data box. It will disappear. It'll give me more real estate to look at on the actual chart. So let's walk through some charts very quickly. And again, this is the default that I use every day to take a look at the stocks in the market. I don't try to overthink things. Everything is here. It may look busy, but hopefully I'll be able to walk everybody through it. Generally, the first thing I look at is the bongo signal on the weekly. I almost never, and with very rare exceptions, will put any money into a stock or a security that doesn't have a green signal on the weekly bongo. Just, there's so many things to invest in. Why invest in things that have negative relative strength? So to me, it just is, it's one more risk aversion technique that I can employ. The next thing is the bongo signal daily, and really what this talks about is if we're in a weekly uptrend and a daily downtrend, i.e. red, like here, maybe, just maybe, there's an opportunity to buy. And as you can see, just so happened in this case, over this time period, to have been sitting right on a bunch of moving averages, which once we hit that green in the daily, you could start to see that there was plenty of strength coming back in and not a bad entry signal. Looking at these two ribbons gives me a great way to manage my risk, or at least screen from a visual perspective what I want to look at and what I may invest in the future. And then we've got the bullseye and percent D. This one is obviously trending down. The colors in the background are the ribbons, which tell me what that number should be, and typically goes red when it's below. I believe this is point. Oh, I need to pull that up. Apologize. We have another little screen here. This allows us to get the actual numbers for each one of the indicators that we've got built. So let's take a look here. At this point, the Bollinger Band is 0.04, which would give us a pink color, and you can see that it's right here, which is a level E on the ribbon. When you look at this security in particular, you can see that big down candle. I can tell you that when I first started using HGS, I typically started with a candle. Now I start top down, which took me quite a bit of time to sort of resist looking at these candles, because what I want to understand is if there is a trend, if there's not a trend, it can be found here. Strength on the daily comes through the percent D. I can look at what's called a high jump, which is really a measure of extension of a stock. In this case, it's not near the top, so I have a good idea that whatever this price is below, it's not extended. And you can see that now in the price. You can also see that it's a huge candle with a phoenix, or I should say down kahuna, which is another measure of percent B of 0.24, a move of 0.24 to the downside. And then here are my moving averages. And the moving averages are the 17, the 50, and the 200. 17 green, 50 blue, red is the 200. And then this dotted line is the group strength. So you can see the way I've set up this chart, it takes me into a position where I can pretty rapidly assess not only some of the fundamental measurements within the stock, but also the technical measurements as well. So let's get out of this, and we will now go over to something that's a little bit more stock specific. So let me get back to my major markets plus. I've got my top down. I think that we can all surmise that today was not a very good day. There was force to the downside in most of these securities. The Bongo dailies were red. The Bongo weeklies are mostly red. And the interesting thing here is that when I look at this, the dollar had a down day. For those of you that aren't looking at the dollar, shame on you. You really should be looking at this every day. The dollar had a down day, but it's in an uptrend on the weekly Bongo. Likewise, you can see that risk is relatively off and that there's money moving into treasuries. There was money moving into dollars right here. There's money moving into gold. There's money moving into commodities. I think everybody gets the gist. The other thing that happened today is that the VIX, or the volatility index, was up quite handsomely at 14%. So if you just look on the change in the day, that's a big number. Now, when you look at the VIX, one of the things that you will see with the VIX is the VIX is not something that you trade. It's something that you speculate on, or at least move in and out of rapidly. It's not a buy and hold, I should say. This is an example of a super huge day in the VIX. Here, and then the previous very large day was this one, or wide price ranges. When the VIX is up above this 200-day moving average, we really need to be concerned. It's now broken above the 50-day moving average, with the 17 getting ready to cross through. That means that eventually these two lines are going to start pointing up, and volatility should start to creep back into the market. And that's what, at least that would be my assessment based on today. What does that mean? Is that typically volatility, and this is sort of the misnomer that I think goes throughout the discussion boards, at least that I read. Volatility neither says that the market's going up or down. It just says that there's a lot of movement within the market. And when there's a lot of movement, it's typically stronger to the downside than it is to the up. So just some food for thought. What we're going to do next, we're at the 1 hour point. If there's any questions, feel free to fire them away. If I can just take a few seconds to do that, Debbie.
I'm sorry. Say that again, David.
I was saying if anyone wants to ask any questions, maybe we can take a few here.
Okay, because we haven't had any to this point, but feel free to type them in if you have any.
Great.
Except for know-how. Except for know-how.
Yeah, I must either be doing an unbelievable job, or Jeffrey is away from his computer. So let's get in and let's start playing around with some hunting. Okay. Because to me that's the fun thing to do. Where do I start when I get my day going in HGS? Well, the first thing that I do is I create my own groups, and you can see as we go through here. But I have a bunch of indexes that I like to look at. What I'm going to do is walk you through how I create what I call the BOG list. I send it out to a small group of folks every Thursday night when I'm not traveling. And what it does is it gets me to a point where within about 15 to 20 minutes, I can look at pretty much every stock that I want to look at in my risk tolerance bandwidth and get to my list. And that's really what HGS is powerful for, is to get me my list, to get me a good understanding of what's in the list and why I've put things onto the list. Getting back to what I started the presentation with. So let's do a BOG list for today, and I'm going to type here for a second in and create a folder of which we're going to fill this folder with a bunch of other stuff. Okay, and that's how we're going to come up with some of our stocks today. Along the way, we're also going to create a filter. We're also going to create a combo. And I'm going to try to do that in a very simple fashion by using something that I was asked to do, and that is the bingo park approach that I sort of threw out there while I was playing with this great software. So let's start off. The first thing I do, I want to make clear to everybody that I screen all of my my lists to make sure that the earnings, QuickPic date, quarterly earnings per share date, has happened already within the last 124 days, or basically the last quarter. Ron Brown taught me a very good lesson, unfortunately, 2 or 3 days after I lost a lot of money, and that was to not invest in things that have earnings coming out within a day or two. And sure enough, that's been some of the greatest advice I've ever gotten. So let's go in. We're going to create a folder, and we're going to fill this folder. And the way that we create a folder is we're going to add a group. Each one of these buckets you see here, these folders, is actually a group. And then within that, within each group are stocks. All right? So let's go to the user groups, and I'm going to create a user group. Now, if I wanted this user group to be under the Galardi indexes, I could put it under there. I could put it under user group. I can even put it under W&B user groups as well. But let's just open this up. We're going to create a group, and I'm going to call this webinar group. Okay? Of course, it would be easier if I was typing correctly. Okay, so webinar group, and there's no stocks in webinar group. I'm just going to hit OK, and I don't need an index because there's nothing in there. All right, so webinar group starts off. The first thing that I'm going to do is I'm going to go to the warehouse. And within that warehouse, I'm going to choose the group of stocks that I want to look at. Now, HGS has folders or groups of reference groups, all the stocks in the AMEX, all the market indexes, the NASDAQ, the NYSE, all securities, et cetera, et cetera, et cetera. The fact of the matter is that I always start with all securities. And where I start within all securities is I always start at scorecard. And scorecard is what gives me that top-down perspective on all of the stocks that have passed that screen that we talked about in the filter that's being used. How can you check all this? Well, if I turn the filter off, which you do by hitting the Shift key and your mouse, you can see that there's 7,400 securities in this all securities group. In order to get back and put that filter back on, I just refresh and hit scorecard again. And what that filter did was that took those 7,000 plus securities and it screened them for that criteria and took me down to 2,266 securities. The filter used was scorecard, and the combo rank, which I showed you earlier, which uses the percentage ranking of each individual parameter, is also called scorecard. So I know what I'm looking at now. Now, what I want to do is I want to, for some reason or another, create a specific filter, which may be a little different than the one that is up here on the screen. So let's do that. And this will allow us to now filter all securities in a different fashion than the scorecard. And one of the ways that we can do that is we can pick from the great work that's already been done. And as I've told you, I'm a big fan of stealing from people that are a heck of a lot smarter than me. One of those people is Ron Brown. And he's developed a lot of these filters. And what I like to do is modify filters to my needs that I know that he's already worked on. Because, as I've learned over the years, he tends to not be very wrong with this stuff. So let's look at one filter in particular that is called free parking. Now, for those of you that are not familiar with free parking means that a stock has shown up very close to its 50-day moving average. And if we look at this filter, you can see that the criteria is that the close has to be above $5, the volume has to be above 50,000 shares, and the percentage close to the 50 is greater than or equal to a -2, less than or equal to a +5. It's hugging the 17-day moving average, meaning that it's, although close to the 50, somewhat turning up, and likewise with the 200. The Kilpatrick rank is in there because it shows that it's been basically a little bit more of a weaker stock. Let's modify this. What I found with free parking is that stocks that hover around their 50-day are usually good candidates to find in turnarounds. And let's just take a look at the stocks that come up off of this filter, and we'll compare it to what we're going to show in just a second. So I'm going to select free parking, and we're going to call this just scorecard free parking. And that just took that 2,000 stocks and whittled it down to 460. So let's just take a look at 2 or 3 of these charts for a second to see what they look like. And here's an example of a chart. This is Nova measurement instruments. Remember, that the purpose of that filter was to find me a stock that's close to the 50-day moving average, which this is. Okay. It's above the 200, which this is, and it's very close to the 17. Let's take a look. Let's see how smart Ron was when he developed. Oh, looks like he's got this down. There's another one below the 17, above the 50, above the 200. Another one right there on the 50. Okay, likewise, right on the 17, but close to the 50. You get the hint. Now, let's go in and let's get back to that warehouse and let's modify this a little bit more. We had that free parking filter up. Let's just say that my style is I want to get a stock that's close to the 50, but also throwing off a signal called a bingo signal, which really is a signal that a stock has come close to a bottom based on the number of parameters. Let's go in and take a look at a bingo so that we can understand what makes up a bingo very quickly. I'm going to cancel out of this. Cancel out of this. Get back to the chart. And I'll right-click to get to that bingo signal. You can see it brings up a box. And then I go to the edit the indicator. And I know that that bingo is on this chart because it says so right here. And this is what your bingo parameters are for the stock. RSI less than 37, %D less than 0.1, and the accumulation and distribution is less than 0. So I want to find a stock that is close to the 50-day moving average, and has a bingo signal and has a positive % B. Because not only am I a big fan of Ron, I'm a big fan of Ian. So let's go and modify this. So the first thing I have to decide is, do I want to invest in stocks below $5? And the answer in my case is no, I don't, and I'm going to leave it at that. The next one is what's my volume threshold? Do I want to invest in anything that trades less than 50,000 shares? The answer to that is also no. I typically won't invest in anything that doesn't trade at least 250,000 shares. The close within the 50 and the 17 and the 200 is all fine. I'm going to leave that. But I want to get rid of that Kilpatrick rank. So let's go in and click on the down arrow, and this will give me all the different types of parameters that I can filter on. Well, if you're really skilled, which I'm not, you can know what is in each one of these folders. Instead, I just use all. And the way I use it is I will scan down, and I will look for that bingo signal. And it should be coming up here shortly. And what I'm going to look for is days since the bingo signal, which by definition, this is going to tell me that a day since bingo stock. And I'm going to say that I want this to be less than or equal to 5 days. So what I've just done is I've just said these stocks are going to be near free parking, near the 50-day moving average, and they're going to have some sort of exhaustion signal within 5 days of the day of this scan. Okay, so this would take us back to, let's just say if this was a normal week, it would be 5 trading days back, which would be today, it'd be Thursday. All right? So from Thursday to today, they had to have thrown off a bingo. And I want to make sure that they've got a % B that's moving up. And we'll just look for % B change. You can see I'm scanning through all this here. There are thousands and thousands and thousands of indicators that you can try to build and create here. So let's just do % B 1 day change is greater than 0. So it has a positive change in % B, meaning that it moved up between the Bollinger Bands. Now, the nice thing about HGS is I know that there's going to be some stocks in here, but if I'm not comfortable with receiving enough candidates, I can check by clicking Preview. And that's what I'm going to do here. And you can see that in this case there's none. And the question has to be, why is there none? And it's most likely it's this line right here, % B 1 day change. So let's kill that. And you can see it didn't work there either. The reason that this is a powerful little function with the preview is that it allows us to develop our filter in a fashion that suits our needs. One of the other things that I can do is that I can change the volume criteria to make that 100,000 shares. Now let's see if anything shows up. Nothing. The nice part about this program is we can continue to fiddle with this until we get numbers that we like or feel comfortable with. And there we go. We'll just leave it at that. So Ron had 50,000 in there. Once again, he showed that he's much smarter than I am. That yielded 2 stocks. What this shows is that over the course of the last day, there was a washout in the market. So we've got quite a few stocks that are well down and not meeting this criteria. So let's just call this free parking test. Click OK, and that's going to give us 2 stocks to work with. I'm going to leave that combo rank the same because, frankly, I don't get too worried about changing this when it's on scorecard. And that brings us our two stocks. Let's take a look at those two stocks and their corresponding charts. So just by double-clicking on this, we're able to get that chart up, maximize it, and here you can see on this chart there's the bingo signal, happened 1 to 3 days ago, happened very close to the 200-day moving average. The stock is moving up with a positive %B change, as you can see here. And the question you have to ask yourself, is this a stock that you would want to invest in or trade? Let's just take a look at the move. Another nice little tool that we have with this software is that we can measure the move of a stock. Take a look at the move of the stock from the open to the close here, or to the close to the close over the last 2 days. And this percentage change of the 2-day period is 2%. I don't know about you, but I would take that any day of the week. So that's one example. The second one is Zion Bancorp, which is through a bingo signal today. So one would ask themselves, if you're looking at this stock, you're really looking at a stock that's had some negative pressure. Has it fallen far enough? And only time will tell. But based on the mathematics that Ian has done, and we've tested it at HGS in our seminars, a signal like this would be predictive that this stock will reverse pretty soon. So what that does is that shows you a very quick example of free parking in a test environment and modifying a filter. Likewise, we can do that with a combo and with our other views as well. Let's go back, and now let's start to create those webinar groups that I talked about in just a minute ago. So when I create my BOG list each week, this is what I do. And the first thing is I go into the warehouse, I click all securities. And really the purpose of going through this is to show you the speed at which we can get this done. It's now 15 minutes after the hour. We may be able to finish this in 5 minutes. And then I'll leave it to everybody on the phone to judge whether we found some good candidates or not. The first thing that I'll do is I'll open up my QuickPic, and I'll take some preloaded views that come with the software that frankly I created a couple of them. This one here, the Smart Groups WB, is from Ian and Ron, and then I use one more. So let's take a look at the first group. Some of you have probably heard of sprinters. Sprinters is something that under the tutelage of Ian and Ron I put together, and I tend to rely on it pretty heavily. Sprinters has 54 securities in it. That would tell me that it's quite a meager group today, but we'll continue to look, and we'll see whether it makes any sense to look at any of these stocks. Let's make a group from the list. We're going to go in. We're going to click Make Group from List. We're going to create a group. We're going to create that group under the webinar group. We're going to call it Web Sprinters, and we're going to save all 54 securities in that group. We can generate an index. That's one of the really powerful things that HGS allows us to do. Next, I'll go back and I'll change that back to all securities. I'll click on my Raptors warehouse view. Much less stocks in that group. I'm going to make a group from the list. I'm going to go into the user group, webinar group, webinar Raptors, save all 11, create an index, and we can continue this then by going into Catapult, which is another one of the screens that I've created in the past, and we're going to make a group from the list. Again, go right in here to the webinar group, and I think you get the gist of what we're doing here very quickly, not even looking at the charts. And I know for some of you that just may sound like it's insane, but I know what's in there. You know, we've created these views and these filters, and we've got confidence. And if you remember from my PowerPoint presentation, I tend to only believe what I see. And I know what I'm going to see here. I'm going to see stocks that have some good strength behind them. And then the last thing that I'll do is I will go into all securities, click on Smart Groups WB Strong, create a group, put it into the webinar group. We'll call this webinar Smart Group Strong. Create an index, and I'm not going to do additional ones, but we'll just stop there. So that now means that I've got in my designer 4 groups with individual stocks in them that I can figure out where I'm going to go fishing. So I know that if I were going to invest this week, whatever I'm going to invest in is within these 4 groups. So let's figure out how I'm going to rank all that. The way that I do it is one of the best tools that I've come to understand and use is the group inclusion report. And basically what this does is it takes all the groups that you want to scan and finds the incidence of a specific stock amongst all those groups. So for example, if Cepheid is in Catapults, Raptors, and Strong, its resultant number that would come back would be 4. Excuse me. So we're going to run that right now and see what we get. And the nice part is when we hit the group inclusion, in order to speed this up, all I have to do is highlight webinar group, unclick the webinar group. I can make a group from this list, which I'll do. I'll put it right back into that webinar group, and I'll call it webinar GIL, or group inclusion list. I tend to limit the number of stocks to 100, which is the default. And now we're going to run it, and let's see what happens. It's going to give me an opportunity to save it. I'm just going to save it as webinar. And we're going to generate that index, and let's see what comes back. What happens is the machine will, the software will generate an HTML file, which will open in any browser. The browser I'm using here is Google Chrome. And you can see that these 3 stocks, Melco, International Coal, and FEI Company, were present in 3 of the 4 groups. Now, let's just go and take a quick look at those stocks. And I think it should be pretty evident once we do that why they're there. So there they are. It's FEI was 1, Melco, and International Coal. Ironically, they're also in Catapult, so they're all there. So let's just take a look and see what we got. I'm sorry, there they are. So those are the top 3, okay? And let's take a look. Anyone interested in that stock? Feel free to jot down a question if you like. Great. That would be a stock that I would say has some oomph to it. That would also be one in FEI Company. And lastly, IPG is also on that list. And I thought that we had International Coal was on there as well. So there's International Coal. That's who we had on there. And we know that that's a buyout, so we're just going to sort of push that to the side. The reason why I wanted to go through this is that today, I hope this demonstration shows that the power of this software, in addition to common sense and your style, is what makes this system work very well for individuals. I just showed you how I like to use it. I can tell you that within those lists, there are certain stocks that I may not trade. I may swing trade them. I may actually invest in certain things. I may, meaning hold them for more than 6 months. This software allows us to do all that. You know, if we had more time, I probably could show a great more examples. What I've just shown you today are stocks that have a lot of strength behind them, that are somewhat leaders of the market, and have good technicals as well as fundamentals. Now, if I can, I'm going to stop here. I'm going to address a couple questions. One of the questions that comes up often is back testing. This is just my personal opinion, and you know, take it for what it's worth. Although I am very interested in discussing back testing with lots and lots of folks, what I found is that constantly trying to prove what I would have made, that has never served me very well. So what I try to do is try to understand what makes up strong stocks and buy them at the right times. Specifically, that's more of a trading skill than it is a scanning skill, like what we just reviewed today. So I know there's a lot of thoughts on that, a lot of you know, different opinions on the importances of back testing. I'd rather live in the moment, knowing that I've got some good sound analysis built in, and that you know, I've got a higher likelihood of moving stocks either up or down based on what we've sort of reviewed today, i.e. Relative strength, the percent D, the volume of the stock, and the price action. So for that, you know, take that for what it's worth. HGS cannot backtest in this system. If you'd like to work with that, a backtesting system that complements HGF, EdgeRater is a very tightly integrated product, and you can find that online. There's a question out there: is can you review your best ETF search? And let me just give you a quick example. I typically will not invest in ETFs for a lot of reasons. The ones that I do, I typically day trade those. So let's just get into the system. We'll clean some stuff out here and show you an example. One of the best ways to get started is to go to your warehouse view and go to the HGS reference groups and click on IM Industries, which you can see I just did that there. IM Industries. The reason why I say to go to the Industry Monitors Industries is that most ETFs are industry specific, or you know, some sector specific type of ETF. The next thing that I'll do when I scan for an ETF is I'll use the top-down analysis, and I will go to Ron's T6, which is the strongest group stocks and ETFs versus the S&P 500. So when I drop that top-down analysis into this, it tells me which groups within the industry groups are moving in a positive direction. And you can see that retail is right at the top. Now, one of the nice features of this program, and it's actually, I think, one of the more powerful features, is that I can take this and pictorially look at this. You know, honestly, I don't have all the patience to look at all these different parameters. What I do know is that based on this view and the filter and the combo, anything at the top is relatively strong, and I can see that from these group ranks that are over here on the right-hand side, plus most of them are under accumulation. One quick way to get at it is to take a look at this little pie chart and click on it. And what I see here is that the market, based on 154 industries, using a %B filter, Bollinger Band, is actually under pressure, significantly at a group level. Now, if we were to go back and look at the indices, we'd see this as well. These slices, as they're called, are loaded into the system. The only one that I really ever use is the Bollinger %B buckets, which is one of the topics that's reviewed at the seminars. And for those of us that have been in HGS and a student of Ian and Ron for a while, we understand this stuff. You can load in others, such as accumulation and things like that, which you can get at right here, and then just pick them. Okay? So A and D is accumulation and distribution. I can go in and take a look at that, and I can see that roughly 51% of the market is under distribution. Now, is that super bad? No. But is it super good? No, as well. The other thing that's really interesting about this is that it shows me that I can click on any of these pies, or I can click up here and find what industries are actually moving in what direction. So this group, there's 7 of them in there. Retail, food, jewelry, tobacco, mail order, agri, cosmetics, etc. They're the stronger accumulation sectors. Conversely, food, electrical products, banking in the West, tools, and advertising are relatively weak. Why did I choose to do this? Because I would rather look at an ETF search using the industry groups than the individual ETFs. And that may sound a little strange, but I think that you can get a better perspective of where an ETF is going to go versus where it's been by looking at the stocks that are most likely to make up its numbers. So I hope that answered that question. I would do it this way and then confirm it by taking a look at the actual ETFs themselves. Any other questions, thoughts?
There's one other question there, David.
Yeah.
As the market may trend down, any preferred approaches to filtering for shorts? Finding entry points?
That's a good question. We can quickly go through that. Let's do that right now. Okay. So again, I mentioned that the market is weak. Okay. So if the market is weak, the next most important component of creating that sector is the industry. So let's just take this screen that we have right here. I don't know who sent that, but this is exactly how I would go about doing it. Let's resort this combo to make it the worst at the top versus the best at the bottom. Okay? So that takes us to the retail office supply index. Let's go to change to the industry group. And I did that by right-clicking. And this is what's in that group. Now, one of the great features of HGS is that it provides an index relative to the stocks in a group. So this index is of these 3 stocks. Now there's others that may have 15 or 20 stocks. Take your pick. The point being is that anything above the index is performing better than the overall group. And you can see that United Stationers is doing very poorly in a very low-ranked group. Okay, let's look at the chart, and you can start to see that this stock just threw a big down kahuna. It's right at the 17 and the 50. If I were going to short this stock, I would put a sell order in right below this 50, and that would be a pretty good a pretty good entry point for short, I would think, because obviously if it can break below this, it's got a nice way down, at least 4 points. Another way to look at the markets is another component within the software, which I didn't really review, but let's review it now. It's the ranking module. And the ranking module, I'm just going to go back up to my industry groups. I'm going to click on the ranking module. And what this ranking module does is it tells us our relative strength. And it also allows us to try to figure out who is losing strength and who is gaining strength in terms of the sectors. Now again, I mentioned that I'm a tops-down guy, so market's horrible, I want the sector to be horrible, and then I'll short something in the horrible sector. That would be the approach that I would take. I can see that this groups at the top here are doing fairly well, right? They're keeping their strength. What I'm going to look for is changes in color, because I'm a pharmacist. If I don't have the spatula and I can't count by 5, I'm not going to figure out these numbers, okay? So what I'll do is I will sort upside down, i.e. lowest rank to highest rank on today's date. And here you can see that we've got a lot of red at the top, which means that the energy nuclear uranium is the worst performing group of stocks. That shouldn't surprise very many people. The difference is that you can see that it's still all red. What I'm going to start to look for is going out to, say, 5-6, 5-13, the weeks of. I want to start to look for stuff that was green that's turning yellow, which is going to turn red. And what that shows me is that these are groups that are losing strength, i.e. going from green to yellow to red. And here we start to see some greens and reds and yellows and weakness all around us. This one right here, fiber optics, you can see it had a little dry patch from 5-6 to 4-1. The point I'm getting at is that not only can you sort using the industry monitors top-down, but you can also sort based on the relative strength numbers that come up through the ranking module. So, you know, if I'm starting to look at some things that are going to make me nervous, I probably would start looking in this basket of industries in this little group here from the 80 to the 90 to see if they're going to roll over a little bit more. Any other questions?
Bob Devitt has a question, and that is,
Okay,
what will you watch to feel the market is going to turn back to positive? What are you going to watch?
That's a good question. I'm going to watch 3 things, and let's go and show them. Okay, so let's go back to that warehouse. Let's go back to the user groups. Let's go to the WB user groups and the major markets plus. I'm going to go to the top-down analysis. I'm going to look at this scorecard. What I want to see are 3 things. The first and foremost, I'm going to check the VIX to make sure that it's staying what I call quiet, i.e. under 15, which is a recent, you know, super low, but it should be between 15 and 20 with very few upkicks. And you can see if we just show this VIX real quick, that historically the VIX hovers right around that number, which is about 18, which is about where we are now. If that VIX goes above this 200-day moving average, we can guarantee we're going to have a number of days, maybe weeks, of elevated volatility, which you know, those are the days where I'd rather stay out of the market. The second thing that I'm going to look at is the U.S. dollar, which I didn't really get into this, but one of the things that I trade the most are currencies. So I find it to be very revealing. You can see that the dollar's had some recent strength here over the last week and a half. It pulled back and then had a strong day again, I believe today, which was the first. The dollar has thrown off many bingo signals, and many of them have been superfluous, for lack of a better way to put it. The primary reason is because there's been no eurekas, which are these yellow bars here. Eurekas are a measure of the euphoria up to the buying side in the arms index. Until I see some eurekas following up days in the dollar, I'm not going to get too excited about the dollar reversing its downtrend. Okay, the dollar rises, the market should theoretically slow down. It's probably not going to rise, but we'll have to see. I think this may have been our big move here for the year. The last thing that I'm going to look at is the oil index itself, which, living in Texas, I am compelled to look at. This is the OIX. On my charts, on my trading system, I use the minis on these. But you can see that oil is somewhat under pressure. Many people are thinking that it's going to drop even further. So as oil drops, we have to see whether the correlation with the dollar continues. And then the last piece is I'll continue to look at the S&P 500. And what I need to know is that this line in the sand, specifically right here, which is basically, let's just call it around number 1,300. If 1,300 holds, then the market should reverse back to the upside, at least one would think. If it doesn't hold, it has a 50-point drop waiting in its sights, which, is very telling in of itself. So those are the things that I'll be looking at. Keep in mind that the two eurekas that I mentioned, and at least one bingo within a week when the bingos are showing. That's the rule. Thank you, Ian, who has typed in to remind me. But those eurekas that I talked about are very critical to look for, and they have to happen right after a bingo. Let's go back to, I'll go back to that chart of the dollar just to demonstrate what we're talking about again. So you can see these yellow bars here are eurekas. What we need to do is see these eurekas right around here, and we don't see them. So that tells me that this series of bingos is probably not the last one that we're going to see. Any other questions, thoughts?
I have another question. And let us know, David, when it's time for you to go. But Pat Turner's asking you to go through your PE calculation on one of the stocks you've chosen to see how you do this as opposed to how Jeff does it.
Well, the good news is I do it exactly the way Jeff does it. so let me just find a stock here. We'll just pick up any stock from our webinar group. Let's go into that. So here's just mentally I can't do 8 by 8. Let's pick one of my winners in the last couple of weeks. Oh, there's one, Optimer. So I've been in Optimer now for 4 months, I guess. So we're down in this range roughly. The buy signals were evident in this, right? You can see these kahunas to the left of me, kahunas to the right. We all know that song from the Beatles. It's sitting on its 50-day moving average. We've got a bongo weekly, a bongo daily triggered. I mean, it had a lot of reason to get interested. A stock like this is a little harder to predict because it's a developmental drug company who just got its first approval. But what I can say is that For specific stocks, and this may not be the best example, what I'll do is I'll add this number and this number and this number and this number, and that'll give me my earnings per share. And then what I'll do is I'll go up and I'll take a look at that PE. Here it's 90, which obviously that's going to come down. It has a little bit more earnings coming in. Then I'll multiply that number to get my PE. So let's look at one that's a little more powerful. Go up to the top here. Ironically, if you look at all this, there's a ton of pharma companies in here, which I've learned, at least in this market, that that's a good sign of fear. Altria also in that group. So 44 cents, that's 88, plus let's call it $1.10, so $1.98, and we'll multiply that by 15. So that's going to give us what our price can be, which is roughly 2 times 15 or 30. And that tells me that Altria is probably cruising right near where it's going to max out at 30 bucks. And if you look at the high jump, you see that the high jump is very close to the top of the chart, which correlates pretty well. So that's typically how I do it. 30 bucks for Altria, and look at that high jump just as a visual confirmation, and call it a day on Altria. I wouldn't invest in Altria for a lot of reasons, but a company that only has $2 to the upside, it's probably not something that I'm going to do unless I'm in more of a conservative type of account. Any other questions?
That's all we have right now. Oh, I'm sorry. Can you briefly explain the high jump from Larry Harder?
I knew that was going to come through. The one thing that I am not very good at explaining, but the high jump is an indicator where basically it adds up the deltas between the moving averages. So when you look at this high jump, what it's calculating is the percents above the 20, the 50, and the 17, and that gives us a number. Ian has actually Ian created this, and if I can, I'm actually going to show you a nice little function within the software that explains what all these are. And whenever I forget, like I just did mentally there, the software will explain everything you need. So it's an indicator developed by Ian to determine if a security is overextended or oversold. Values are commuted by adding the percentage change values from each of the 17, 50, and 200-day, moving to the high price of the day. So here, when this number, I just know from experience that when this number starts to touch the top of this this chart, it's going to typically reverse, and you can see it did it there, right? See that? It did it here. See that? It did it here. See that? So, again, I'm a big fan of stealing from people that have already done the work and know what they're doing. Ian's one of those guys. Rue the day when you go against these signals, because you're probably going to be wrong. Larry, did I answer that question? I'm going to assume the answer to that is yes. So, Deb?
It is
thanks,
yes.
Larry. Okay, cool. Any other questions, thoughts? Oh, the best rule. Oh, here it comes from the master. Let's let the master in here to let me just read his answer. The best rule of thumb is when the stock is 100% above the 200-day moving average, the institutions sell. Now, I can not that is from Ian, but I can tell you that on every single trade that I make, I put in a sell limit order at 100% above that day's 200-day moving average. So if I forget to do anything, and you know, God willing, I am able to get 100% above the 200-day, I know that I've got a one cancels other order in that's at least going to sell my stock if I get up there. It's a measure of greed, frankly, for me. So I want to make sure that I get out of those stocks, and that's one of Ian's rules. Any other questions, thoughts? Okay. Well, with that, I'm going to turn it over to Debbie, and I thank everybody for showing up. I apologize for being a little rushed through all this, but there's so much stuff to do. And today I wanted to be able to show folks what I typically do to create a list. I try to do it quick. I try to do it with some sound previous research. I don't backtest more than what I would ever need to. And in my opinion, I've already done my back testing, and I know what's working and has worked, and I stick with it. And I never go against what I see. So with that, I'm going to stop and put my little ending slide back up there for everyone to see, and we'll call it a night.
Thank you, David. You're getting lots of accolades here at the end, and I hope to see everybody soon in a few weeks for our next webinar.
All right. Thank you all.